Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. Today's topic is I'm going to be answering some of your questions that you have been asking me. I look through the comment section quite often and I always look for questions that people are asking, and sometimes I usually get the same question multiple times and therefore I make a video about it as opposed to answering 15 different people about the same exact answer. Before all of this, or rather during all of this, if you also yourself have any questions that you would like to ask me, you would like me to elucidate on, go a little bit further, or just simply talk more about, ask me in the comment section and I will more than likely make a video on it, as I am. I like making videos, so there's going to be more videos. To start things off, the first question that I'm getting a lot is, should you invest now? That is during the 19 situation that we currently have going on, because you may have noticed or may not have noticed, depending on where you're looking at the news, the stock market and many other things are actually going up in price, which is surprising a lot of people. That's an entirely different video topic that we're probably going to get into some other day. As everything has been going on and millions of people have been losing their jobs in mass, for some reason stocks continue to go up. This is mainly because, mainly, a good huge portion of it has to do with the fact that governments, for those of you who do not know, are printing, creating, making trillions of dollars, not millions, not billions, but trillions of dollars. And they're pumping that money that they're printing, making, or creating on a computer or in a printing press into stock markets in order to buy up things called securities or equities, in order to raise the prices of these things to make it seem as if everything is okay. And this is usually because of some type of weird banking governmental intervention where they feel that they have to do these things in order to kind of keep prices propped up, in essence trying to help the economy. But the issue is if everybody's broke, no one has any money, everything that's actually going into the stock market is relatively falsified. And even what we're seeing right now is the stock market is going up. And we actually just hit a new all-time high the other day, which is something I can't mentally deal with right now. And that's because of these stocks called FANGs. It's Facebook, Amazon, Apple, Netflix, and Google. And there's another couple of other tech stocks out there as well. These themselves, as everyone is kind of stuck home, are still dragging up in price because everyone is buying stuff online, or they are doing relatively well because they're in the tech sector. So the question always comes down to, at least for the last 2 months, is now a good time to invest? This is, I'm going to tell you as honest as completely possible. What we see in the market right now is not the actual reflection of the world. We have, and once again, I sometimes just focus on news from the US, simply because you probably see it in your own home country. This is usually the news that is pushed out there because the US is usually an indicator of how well the rest of the world is doing. If the US is doing bad, the rest of the world probably isn't doing that great either. So when you have a whole bunch of fake money that's pumping up the markets, and the stock market itself is probably only being dragged upwards by maybe 5, 6, 7 companies in total, it's clear that there's a huge problem. Millions of people have lost their jobs. No one really has any money. The stimulus check that we had before wasn't enough for all of these people to be able to pay their rent, buy food, or anything else. It was a complete joke. So a lot of economists, a lot of analysts do believe that what we're seeing now is a fake pump. I don't know if you heard a couple of months ago, they were talking about like some type of a V-shaped recovery. You probably heard this over and over and over. Things would go down and we'd have a V-shaped recovery, which means a shot straight back up, which we currently have, but it's based off of nothing. It's as if the last 4 or 5 months haven't taken place, which they have, and we're still going through. So while I cannot tell you what to explicitly do with your money at any given time in your life, as it is your money in your life, it is relatively clear to many economists, and I implore you as well to do your own research just to hear exactly what they have to say, whether that be through an old-fashioned newspaper, something online, or through a podcast, that they're expecting a dramatic drop across the entire board. That is to say, real estate, stocks, bonds, you name it. They're all being propped up by falseness at the moment. So I myself am not investing in anything myself except for crypto. I'm saving all my coins as much as I possibly can because I am also expecting a huge, dramatic, crazy drop across the entire board. at which point I will then try to aim for buying more property, because I think at that point prices will have completely plunged. I get this question a lot. Is now the time to invest? I'm having a lot of friends asking me which apps to use, what so-and-so to use, how to buy this, where to get so-and-so. And I try to tell them, I know a lot of people, they don't really hear what I'm saying. If you buy now, just always be certain that you understand that there's not only a risk, but there's a risk that everything can completely fall down, because we were having talks before, not just me, but a whole bunch of analysts and et cetera, that we could be on the cusp of a major recession and or a depression. So just watch where you're putting your money. And if you do decide to put your money somewhere, just understand that there's a risk that it could lose 99% of its value. And then eventually, maybe in 5 years' time, start going back up. That answers that question. The next question that I keep getting, another one. People are asking, what are some of the good picks that I would choose during an economic downturn? People are asking me, like, would I choose Bitcoin? Would I choose Netflix? This really depends. A lot of the questions that I keep getting are, I don't want to say vague, but they're kind of vague. During an economic downturn, what would I choose? Me, myself, I would choose Bitcoin, as it is deflationary in nature. And when you get news that the US alone has printed $7 trillion, that causes massive amounts of inflation. Real estate, realistically, as far as it stands right now, unless there's a new trend I don't know about, people will always need a place to live. Buying land is also really good. As far as like stocks and stuff like that, to be honest, once again, there weren't many people who would have told you during an economic downturn that Amazon, Netflix, or any other online service would have done really well, because everyone usually assumes when the boat is sinking, everyone's kind of sinking, and it's not just that person knows how to float and that person has their own boat in their backpack. Everything that's happening right now is relatively unprecedented over the last 100 years, so it's very difficult to say. I think if or when we do happen to see some type of a dramatic stock market crash, we are going to have this discussion once again, because usually you can tell when some things are incredibly undervalued, if you kind of want to say that. So should we have a crazy stock market crash like is expected, we will have an entire video where I will go over exactly what I think myself should be invested into or looked into, because I still think it's going to get kind of rough. Next question. Someone said they're planning on holding stocks. Stocks is blue chips or mutual funds or index funds. I think they were asking which one should they hold first. I think that was the question. I wrote it down, I think almost word for word, but looking at it now, it kind of doesn't make a lot of sense. This depends on what you have, what your money goals are for the future. If you are just getting into the investment field, I would recommend you not start buying stocks, simply because you are only buying one fragment of one company at a time. While this is good over the long term, if you would like some type of extra exposure to the entire stock market or to major parts of the stock market, I would suggest you look into index funds or mutual funds. The only main difference between those two simply being is that one is passive and one is active. So usually for index funds, you will have exposure to a large index of funds, usually on the S&P 500 or the NASDAQ, but it will be passively managed, if you will, and your fees will be lower than if you were in a mutual fund. With a mutual fund, you are also going to be exposed to a large number of stocks as well, which is also great. However, it is actively managed by someone behind the scenes who is either pulling out or putting in different stocks at a time. So if this stock is underperforming, it gets yanked out and a new one gets put in so that you can reach the goals for the actual mutual fund. However, with this actual active management, you are going to be paying active fees. So normally index funds will have a monthly fee or a fee in general of 0.5%, that is to say half of 1%. However, with the mutual fund, your fees can range anywhere from 0.75%, anywhere from 3%. If you are a hyper beginner, I would suggest index funds or mutual funds. Me, myself, personally, I love mutual funds. I don't know if I like the sound of them or what it is, but I mean, there are people on both sides who will give you negatives and positives about each. Kind of depends on what you really want. Yeah, and I say mutual funds or index funds because you have more exposure. Like with the normal mutual fund, you'll have exposure to maybe 15 different stocks. You'll have the Amazons, the Facebooks, the so and so, all inside of this one fund at one time. The fund may only cost 100 to buy into an actual portion of the fund, and you have exposure to these 15 stocks as opposed to you buying a stock and then you waiting patiently to see if it goes up or if it goes down. Kind of how I feel about it. Next one. People have been asking, is there a UK or Ireland alternative to Robinhood? I Googled around. It's kind of sad. There only seem to be two at the moment. There's one called Degiro, that is Degiro, and another one called Free Trade. I don't have experience in either one of these because I don't use apps to invest. I usually just do everything on my computer. I think it's mentally, I feel better about doing it this way. And also there seems to be a lot of, or not a lot of options for people in the United Kingdom, as a lot of the apps just simply aren't there. They just legally aren't allowed to pass through borders, or you're not allowed to use them, which is also another conversation entirely in general about the actual open world of finance and how a lot of the financial world is stuck in the 1920s as if, we don't have the internet. So there aren't many. I saw a lot of people online saying that Degiro, once again, always do your own research and actually look into this yourself. Don't simply just download it and go, oh, this is amazing. Always check for reviews to see how other people liked it. If it was terrible, don't use it. And apparently Free Trade is gaining in popularity, but is also not as widespread as Degiro at the moment. Right. 1, 2, 3, 4. Fifth question. A lot of people are asking, do I think that crypto or Bitcoin will ever stabilize in price? This should be fairly straightforward. The idea is that based off of liquidity, the ease or difficulty of being able to take money in or out of the market, Bitcoin has fairly okay liquidity. It is the most liquid cryptocurrency. However, it is nowhere near as liquid as the bond market, stock markets, treasuries, securities, whatever other things, even the gold market as well. If you have been in crypto for a while, you may have not. I'm here to tell you, the idea is that Bitcoin will at some point lose a large portion of its volatility once it becomes a multi-trillion-dollar asset. That is to say, once Bitcoin itself has passed by the $50,000 mark and it has a $1 trillion market cap, we won't see as many fluctuations. Even if you've been in the cryptocurrency space for even longer, you may remember 2012, 13, and 14, the markets were obscene. You had days where Bitcoin went up by 28%, next day went down by 14%, next day was up by 13.5%, and then the next day was down by 40%. These fluctuations were happening because there wasn't as much liquidity within the market. So if someone was selling a huge amount of Bitcoin or simply moving it, as we've seen before in the past, the price was very volatile because people had no idea what was actually happening within the market. A lot of this impact gets absorbed when you have a multi-trillion-dollar market. If someone decides to sell $15 million worth of Bitcoin, it really does nothing against the trillion-dollar market cap. So in a wonderful, fantastical world where eventually we do potentially one day, nobody knows, have a multi-trillion-dollar market cap for Bitcoin, and Bitcoin's market cap is around $5 trillion, $250,000 per coin. Not getting into that discussion right now. The smaller or larger movements won't really have as much impact on Bitcoin's price, and a lot of people do assume that if we should one day eventually maybe get to a $500,000 per Bitcoin in the next 10 years, that volatility will almost be completely non-existent, and it'll be one of the most stable currencies on the planet. So do I personally believe so? Yes, of course. I mean, I can't say of course. Yes, in my mind, after the research that I've done, I've come to the conclusion as well that currencies get more stable the more liquid they are, and Bitcoin's liquidity has increased massively since the beginning of 2000 or 2009 or 10. So yes, I do think that Bitcoin will eventually stabilize in price, but that won't mean that Bitcoin will just stay that way forever. As more people get into the network and Bitcoin's deflationary nature continues, and people eventually see that fiat currencies are crazy inflationary, this then mathematically should cause the price to continue to rise with less volatility. Hope I answered that question. Next question was, when selling on dropshipping or eBay, what markups do I suggest percentage-wise? This is another question. I made the dropshipping video, and then I've spoken about eBay about 2 or 3 times on here. This also kind of depends. It's not really that difficult. It's more of a, when I sell things online, if I'm, how do I say this? It's not difficult, but for instance, if I get something for $1 and I see that that product is in demand or has sold before, but there are currently none other ones on the market, I price mine a little bit higher. So if I get it for $1, I may sell it anywhere from $29.99 to $49.99 just because of the things that I sell online. However, it's also important to simply look at what other people are selling. Realistically, if you got it for $1 and you sold it for $5, that's still a 5x on what you previously had before. So that's also totally fine. Don't get caught up in getting don't buy something for $1 and then expect to sell it for $300 unless there's, I've seen markups like that before and they've actually sold, but what have you. I think realistically, as long as you cover the cost of buying it and the cost of the fees that you're going to pay as you are selling on eBay, Amazon, or any other platform that you're going to be using, you're probably completely fine. Test the waters. It's a learning game. When I started selling stuff, you can't, you learn very quick what sells and what doesn't sell. I mentioned before the entire thing of having like low shipping as opposed to free shipping, because sometimes free shipping kind of scares people off. You'll learn very quick. If you bought it for $2 or $3 and you have it listed for $49 and no one buys it, you have it listed for $39, you start getting clicks. You have it listed for $24.99 and you sell 1, 2, or 3 of them, well, that's your golden number. You're also making a very huge profit. Test the waters, try everything out, especially if you are brand new to all of this. You have time to learn. Don't get caught up in the idea that because you're starting something, or you're making a new business, or you have a new online something, that you have to be the absolute best master at it at the very beginning. That's a lie. Don't let people fool you into thinking that in the very beginning, especially your first year of doing something, that you must have mastered it. It takes a while to learn it, and this is why I always say if you start an online business, 3 years down the line, you'll be completely fine. You know exactly what you have to do, how you have to sell it, how you have to package everything, and exactly what price people are buying for. Yes, that's my markup answer. And I saw this one a couple of times as well. People were asking, when investing in stocks, do you only receive a dividend as an accredited investor? For those of you who don't know what an accredited investor, it's pretty much, no, you will still receive the dividend. There are usually no restrictions on you receiving a dividend unless the website states so. If you are into mutual funds and or stocks by themselves, and you see that something says that you will receive a dividend from holding said stock, you yourself will still receive that dividend. You don't have to be rich. You don't have to be an institutional investor. You don't have to have any special paperwork to get it. This is why we have the discussion of people getting into things that pay them dividends, because it's for everyone and not for the super rich. So no. You do not have to be an accredited investor or an institutional investor to be able to receive a dividend from the stocks you are holding. No. Yeah, that's going to do it for those questions. I do hope that you all enjoyed. Once again, if I miss anything, if you want more answers, if you feel I should talk more about something, ask me. I'm here for all of these things. Hope you all enjoyed. Hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching and listening. And I will most certainly be talking to you all soon. See you.